Navigating today's world of information, it can sometimes feel like trying to drink from a fire hose, right? Just drowning in data, trying to figure out what actually matters. But what if there was a better way, a strategic shortcut? Welcome to the Deep Dive. This is where we take a whole stack of sources, could be articles, research, maybe even your own notes, and we really dig in to extract the most important bits of knowledge, those key insights. We want to give you those aha moments, without all the overload. Today, we're doing a deep dive into Pentair, looking at their recent performance, their strategy going forward. If you're not familiar, Pentair is a global leader in helping the world sustainably move, improve, and enjoy water, a pretty vital area. We've got their second quarter 2025 earnings call transcript right here and the news release that went with it. And honestly, it's a fascinating look at how a major player in such a key industry is navigating what they themselves call one of the most continuously challenging dynamic landscapes globally. So, over the next little while, we'll unpack their financial wins, we'll dive into their key business segments.
Understand how they're adapting to big economic shifts, things like interest rates, and even look at how they're tackling these, frankly, unpredictable challenges like tariffs. Let's jump in. Okay, so let's really get into the numbers now. Pentair delivered, and they used the phrase, a record quarter in Q2 2025. Multiple key metrics hit records, but they also said the environment is incredibly challenging. So considering that context, what really stands out to you as most significant in these results?
Well, yeah, it's not just that they hit records, but like you said, how they did it in this volatile climate. That's what's fascinating. I mean, sales hit $1.1 billion. Okay, that's up 2% year over year. Core sales up 1%. Modest growth, right. But the real story, I think, is profitability. Their adjusted operating income jumped 9% to $297 million, and that expanded their return on sales, basically their profit margin, by 170 basis points, 1.7 percentage points, hitting 26.4%.
Wow.
Yeah. And adjusted EPS, earnings per share, rose 14% to $1.39. So it immediately makes you ask, right, how did they manage to squeeze out so much more profit when a lot of companies are, frankly, struggling with margins right now?
That level of profitability, it definitely makes you lean in. And it wasn't just the earnings figures, was it? Their whole financial discipline picture looks strong.
Exactly.
They hit record free cash flow, too, $596 million, up 14% from last year. And they were busy returning cash to shareholders, repurchasing $75 million of shares just in Q2. That brings their total for the year so far to $125 million.
Yep.
That financial discipline, it feels like a really big, maybe sometimes overlooked part of their success story here.
Absolutely. And if you connect those dots to their bigger strategy, a lot of the success comes right back to their specific initiatives. Take the transformation program, for instance. This is basically their company-wide push for efficiency streamlining, cutting waste, optimizing the supply chain. It's already delivered over $200 million in savings since early 2023. Just in the first half of this year, $44 million.
Okay.
And they're on track for $80 million in savings for the full year 2025. That's net of investments they're making. And they're aiming for a, pretty ambitious 26% return on sales by the end of 2026. So this consistent focus on operational efficiency, it's clearly paying off.
That efficiency focus, it definitely builds a strong foundation.
Right.
But, beyond those core financial moves, did anything else catch your eye? Any new investments or innovative things showing where they might be looking to grow next?
Yeah, actually, something pretty insightful was their incremental investment in a startup called Hope Hydration. It's a really interesting concept. Their mission is to deliver free filtered water through these digitally connected refill stations.
Okay.
And the revenue comes from advertising on those stations. What's neat is they actually use Pentair's own EverPure filtration tech.
Ah, gotcha.
And the goal, obviously, is reducing single-use plastic bottles. So it's a great example, I think, of investing in strategic growth that perfectly matches their core mission around water sustainability while also tapping into, potentially new revenue streams.
Right. And building on that point about their financial health, their capital allocation strategy really underscores it. Their net debt leverage ratio is down to just 1.2 times. I mean, their debt is only 1.2 times their earnings. It's very healthy. Down from 1.6 times just a year ago. So they clearly have a strong balance sheet, a lot of flexibility.
Precisely. And they're putting that capital to work strategically. They're paying down debt. They're paying consistent dividends. They just paid $1.25 per share in Q2, which, get this, marks their 49th consecutive year of dividend increases.
49 years. That's incredible.
Isn't it? Plus the share buybacks we mentioned and those kinds of strategic acquisitions or investments like Hope Hydration, they're targeting a high teens return on invested capital, ROIC, over the long term. So it shows a real disciplined focus on maximizing value for every dollar they deploy.
Okay, so from that big picture financial view, let's drill down a bit into the individual business segments because, each one tells a slightly different story about what's happening in the market right now. They break it down into flow, water solutions, and pool. How did Q2 shake out for each of those? What did we learn?
Well, the pool segment definitely jumped out. Sales there were up 9%, hit $427 million. Now, that growth came from a mix of things. Price increases, some volume, and an acquisition they made last year. But the picture for the broader market is, well, it's a bit nuanced. Yes, they're seeing price hikes. The industry overall is up maybe 15% over the last 12 months. But, and this is key, new pool construction is actually modestly down now. And people are putting off remodels. What we're seeing, apparently, is a clear trend where people are making their existing equipment last longer, buying spare parts instead of whole new systems. It suggests a shift towards repairs over replacement, and you have to figure higher interest rates are a big driver there, making those big discretionary spends tougher.
So if you're reading the tea leaves for the broader economy or maybe the housing market specifically, it sounds like even in pools, which you might think of as a strong area, those higher interest rates are really starting to bite into consumer spending habits.
Exactly.
How much of Pentair's growth there is, sustainable demand versus just those price adjustments catching up?
That's the critical question, isn't it? While pricing helps the top line, that shift to spare parts strongly suggests consumers are tightening their belts. It could mean new demand is plateauing. So Pentair will likely need to lean even more heavily on that aftermarket, the replacement part business, to keep momentum, especially if rates stay high. It really highlights that sensitivity to pricing interest rates that's playing out right now.
Fascinating dynamic. Okay, so from the pool segment, let's pivot over to flow. That tells a bit of a different story, right? How did flow perform?
Yeah, flow was basically flat overall. Sales were flat, core sales down just 1%. Residential sales within flow were also down 1%. But importantly, the rate of decline has slowed down a lot over the last couple of years. So maybe some stabilization there.
Okay.
Commercial sales, though, they rose 1%. And that actually marked their 12th straight quarter of year-over-year growth. So pretty consistent demand on the commercial side. And industrial sales were flat, but that was also an improvement from previous quarters, maybe signaling a gradual recovery starting there too.
Okay, and then the third piece is water solutions. Sales there actually went down 4%, mostly because of lower volume. What drove that decline?
Right, so in water solutions, commercial sales dropped 3%, and they pointed mainly to a softer food service market. Think restaurants, hotels, that kind of thing. Residential sales were down 6%. That was blamed on the sluggish U.S. housing market, plus some deliberate portfolio actions.
Portfolio actions. What does that mean here?
Well, what's really interesting there is their strategic decision to sell off their small commercial services business. They'd bought it back in 2021, but apparently the market just changed on them. It ended up being a lower margin business, stuck with fixed price contracts while labor costs soared.
Ouch.
Yeah, and it was apparently causing some channel conflict, kind of stepping on the toes of good distribution partners. So they basically decided the extra investment needed just wasn't worth it. They'd rather focus on their higher margin filtration and ice businesses.
Makes sense.
Now, selling it means they'll lose about $20 million a quarter in revenue in Q3 and Q4 this year. But they called it a margin-accretive smart decision, meaning it should actually help their overall profitability rate, even though revenue dips short-term.
Gotcha. A strategic trim, basically. Okay, let's talk about tariffs. This seems like a huge, constantly moving target for so many global companies right now. Lots of uncertainty. Pentair had initially estimated, I think, a $140 million hit from tariffs for 2025. What's the latest update on that?
Yeah, that number has changed dramatically. Their updated estimate for the 2025 tariff impact is now around $75 million.
75. Down from 140.
Exactly. It's a huge drop. And it's almost entirely driven by lower China tariff rates. Those apparently plunged from 145% down to just 30% during Q2.
Wow. Okay, so doing the math quickly, that's like a $65 million benefit, right? Less tariff cost than they expected? The big question for anyone listening is, how does that translate to their bottom line? Are they just pocketing that $65 million?
Well, that's where it gets a little more complicated. They're not just flowing all of that $65 million straight through to profit. What they did strategically was decide not to go ahead with about $50 million in price increases they had originally planned. Those price hikes were baked into their earlier forecast, partly to offset the higher tariffs they were expecting. So since the tariffs came down, they pulled back on some price increases. So the actual net benefit from the lower tariffs works out to about $15 million. And of that $15 million, they've flowed about $10 million into their increased guidance for the full year.
Right, makes sense. So they're sharing some of the benefit with customers by not raising prices as much and adding some to their outlook.
Exactly. And just to add another wrinkle, they're also keeping an eye on a potential new $10 million in tariffs related to copper and the European Union. That could hit starting August 1st. It's not in their current guidance, but they said they have plans to mitigate it if it does happen.
It's just incredible, isn't it, how these big global things like tariffs can really tie a company's hands on long-term strategy. They even mentioned this constant shifting has sort of paused their long-term factory footprint plans because it's so hard to get clarity on where to invest in the supply chain.
Absolutely. It forces constant adaptation.
It really shows how those macro factors just ripple right through a global business.
Yeah, but despite all that uncertainty, their confidence seems pretty clear. They actually increased their full year 2025 guidance. They now expect sales growth of around 1% to 2% for the year, and adjusted EPS between $4.75 and $4.85. That's up 10% to 12% compared to 2024.
So still guiding for solid profit growth despite everything.
Right. It reflects, I think, their confidence in the strategy, the operational efficiency gains. Remember those transformation savings. They said they're still in the low to middle innings on that.
Meaning more savings potentially to come.
Exactly. Plus, their core business model provides resilience. About 75% of their sales go through two-step distribution wholesalers, or distributors not direct to end users. And about 75% of their revenue comes from replacement sales, which tend to be more stable than new installs. So they believe they're really well positioned to capitalize on these big long-term trends like, growing concerns about water availability and all the aging infrastructure that needs updating around the world.
Okay, so wrapping this up then, what does this deep dive into Pentair's Q2 really mean for you, the listener? Whether you're tracking economic signals or just interested in how these critical industries operate. We've seen how Pentair is, well, pretty successfully navigating a really complex global environment. They're doing it by focusing intensely on operational efficiency, making smart strategic investments in areas like that Hope Hydration startup, and showing real discipline in how they manage their capital. Their ability to deliver record results and actually raise their guidance, even with all the shifting market dynamics and tariff confusion, it really speaks to a very adaptable business model, doesn't it?
It really does. I think this deep dive highlights the delicate balance companies have to strike today. Pushing for growth, absolutely, but also maintaining the agility to react quickly when unforeseen things pop up, macroeconomic shifts, geopolitical events. It's almost like a masterclass in how these focused transformation efforts can build a really solid foundation of efficiency. It prepares them to really leverage higher demand when the broader markets eventually recover, especially if they keep a patient eye on factors like interest rates easing up.
So maybe a final thought for you to mull over as we finish. Think about how deeply intertwined our everyday lives are with essential resources like water, and how the economic decisions and performance of companies focused on these resources like Pentair can actually reflect the broader health and maybe the future direction of the entire global economy. What kind of, perhaps unexpected opportunities might arise if the world's focus truly sharpens on sustainably managing water? And how could that accelerate growth in surprising ways for companies positioned like Pentair? Something to think about.